Good evening and a very warm welcome to all of you. I think special occasions like this milestone in a fund's history, 3 decades of existence, are really important milestones and excuse to interact with you and also have a conversation with you. Today, I'll be joined with our head of equity and a very well known in the investment management function, Ajay Tyagi, as I converse with him about this long-term story of persistence and endurance. But I think I wanted to use this opportunity. I'm greedy that since all of you are here, I share some of the stories, some of the things which we have learned and how our investors have made long-term wealth by staying invested in this fund. And there are some basic principles which really cut across schemes of funds, more related to behavior than anything else. So if you give me about 5 to 10 minutes, I would like to take you through some of those learnings which we've had as a fund house, and then hand it over to Ajay. First, I think I wanted to really, take this opportunity to tell you that we are in a very good place from a category perspective, from a mutual fund perspective. When you're analyzing a category, you look at multiple things. You look at economic trends, you look at demographic trends, you look at technology trends, and then you synthesize some of those learnings to see how will it augur for the industry and the category in the long term. So just from a basic indicator perspective, there is well-known data, and if you Google it, you'll find that when the per capita income of an individual in a economy touches about $2,000, a rapid shift towards financialization of assets starts happening. We've been witnessing that shift over the last 5 to 7 years from real assets to financial assets, and India is pretty close to that mark. I also wanted to take this opportunity to illustrate the impact of these trends, and I'll just use the demographic trends as an example. Now, millennials and Gen Z is a terminology, which is more true for the Western world. For us, I think it is the time period remains the same. People born between 1980 to 1994, for us, probably we can call them generation of the liberalization generation, which have witnessed liberalization. And the Gen Z would be the smartphone generation for India. These are digital natives. Together, they form close to 51% of the active workforce, which means there is a large young population who's actively working in the economy. Now, I am just going to lay a thread around the demographics. When you look at population growth, that results in the population increasing, which means that aspirations of people increase. As aspirations increase, for a country like India, which is so diverse and well spread, people tend to start migrating to larger cities, which yields to something called urbanization. The bigger cities become bigger because that's where people think there are opportunities. Now, once that happens, traditionally, the structure of joint families has been breaking down, and it has resulted in nuclear families. But added to that, in the pressure of living in a large urban metro, the family structures are also undergoing change. And therefore, what I wanted to say, the role of women is going to change. You will see a lot of women entering the workforce. So along with this young, traditionally investments have been an area which have been male dominated. But as you see women becoming a lot more active in the workforce, they'll also start participating in the investment opportunities. Now, as this happens, because of advances in medical, availability, infrastructure, people are going to live longer, and therefore you will have corollary to this younger generation. Over a next couple of decades, we're also going to have a sizable aging population. Just as a matter of statistics, this is the first time in the world, when a world has about 7 billion odd population, the number of people who are 60 plus is around 1 billion, and it is higher than the number of people who are less than 5 years old. So aging by itself creates a different set of issues. And all of the things which I've mentioned as part of demographic trends have money at the center of it and the role of money as we go forward. Now, because of this, we've seen that financial concerns are top of mind. Gone are the days when people sought after, a typical government job, 9 to 5. You entered and exited through the same organization. So you hear of terms like gig economy, moonlighting, people having multiple jobs, using their spare time to earn more money, having a side gig or a side hustle using the digital economy. And this is because, the big concerns around money are around living from paycheck to paycheck. How do they manage, survive, grow, thrive to manage their aspirations? A lot of people, you would heard the term FIRE, financial independence, retire early, but a lot of these set of people, both the liberalization generation and the smartphone generation, are not confident about their retirement and financial comfort. They don't feel financially secure. Now, when people are not confident about their future, the need for advice, the need for intermediation, the need for credible sources of information increase. And I think one of the things where we are looking at, long-term financial future, that is a cause of a major stress. And besides that, how do you manage your operating cash flows, day-to-day finances, relationships? All of these are causing stress. So materialistic pursuits are causing stress in the workforce and generation. And I think it's important that we need to find the right balance while doing this. However, my idea to tell you this was that if we are sensible around our money management, and we firmly believe as an institution that money management is a life skill, just like we were taught physical education and the rising consciousness around health, I think it is time that we become a lot more aware around how to manage money, have a lot more conversations around our dinner table with our children, in their schools, around money, and feel comfortable around money. I think it is imperative because it will help alleviate a lot of the stress which you are seeing, which is there in this generation. I think for us, one of the learnings which we have seen, like I said, we have a fund which have a span of a long time, 2-3 decades and longer. And really the formula, and all of you know this, and people who've been investing or people who've joined in or people who are advising, there's no shortcut to making money, right? The first is on inverting our basic equation of income minus expenses. You look at savings. I think the first thing we have to do is income minus savings, whatever is balance you spend. So the starting point is being able to set aside a certain sum of money, tie it to some goals, because that brings in psychological ownership. It also prevents us from falling prey to fear or greed or making any impulsive decisions. It helps us stick to our financial goals, which means that it will give you the benefit of time. You'll stay invested for longer, and automatically the compounding kicks in, results in voila, wealth creation. You rarely know, and suddenly, because of your inertia of your sticking it through in your investments, you've created a nice pot of gold which can give you peaceful sleep at night. And I think it's fairly important that we do this. But when I say this, this is a formula, right? All of us relate to this. We know this, we've read about this, but still, there's something which comes in the way between following this, knowing this and doing this. And this is where I wanted to really talk about what we've witnessed. A lot of people have entered the category in the last 18 to 24 months, roughly, 15 odd million new investors. People end up, starting their journey by buying furniture. What do I mean by that? Really, when you're entering a house, you will get to know the layout of the house before you buy furniture. You will not buy furniture and then decide this is the house I want to rent or build, right? But we end up doing this for our financial house. We end up buying products which are like furniture without having a solid plan, or we follow tips and trends. My friend at workplace or my relative at home has suggested this great tip, great idea to make money, and I get swayed by it and I put in some money. I, given our value seeking behavior in the economy, rarely do we appreciate advice. So we are happy with free advice, and free advice, there are no really ownership in that. It's freely given out by its very nature, and we fall prey to it. With technology, there is also advent of tools, frameworks, what is deemed as robo advice, uh, or it's a mix of hand-holding, whether it is going to MFDs to seek advice or the advisors by paying fees. Uh, all of this, I think, comes into play when we start acquiring a certain amount of products and we have wealth. It tends to become confusing. And I think there's no shame and embarrassment at that point in time in seeking professional help or seeking guidance. Because what you see on the slide, more often than not, when we look at a scheme or a fund or a underlying product's returns, we see it as X returns. But as an individual, when we've invested, we don't seem to reconcile. There is always a gap in what is shown as the product return versus our returns. And that gap is what we call behavior gap. It is related to not being able to keep our emotions in check. And I think that is something which we've realized, that true power is in restraint. Our ability to observe the market with logic, trying to keep our emotions in check, delayed gratification, all these are things which help us in the long term. And when I say the long term, right, if you were focusing on the ups and downs, one would feel fearful or greedy, jump in, jump out. But I think the ability to just zoom out and look at this graph of 4 decades, right? 15.2% CAGR, which really means that in a period of 40 years, roughly the money would double every 4.7, 4.8 years. So if I look at 5, probably you'll get 8 doubling periods, which means if you had started with X amount in the beginning, it would have become 256 times by the end of this period. And that's the power of staying invested for long and getting the benefit of compounding. Just to quickly sum it up, I think the first part, what we already started with, that failing to plan is planning to fail. So if you want to reduce your stress in your financial life, one must start preparing, getting to know what are your needs and wants, seek help, seek guidance, draw a rough outline or a structure of a plan. I think the sooner you start, most of the behavior is shown by procrastination, right? We wait for perfect information. We wait to build enough trust. Waiting on the sidelines has a huge opportunity cost. So I think we should just take the plunge into the category and learn along the way. I think this is one of the most important things, because the sooner you start, the better it is. And you automatically become curious once you are in the category and your hard-earned money is being invested. You take a lot more interest. And we know all of this, right? We know the next piece which says that don't try to time the market. I think I've already shared that time in the market is more important than trying to time the market. Well, a sound intellect and with emotional discipline results in a rational investor. So, our worst enemy are our own emotions. So we should be able to observe the market with logic. That will help us in the long run. Having an asset allocation plan, ensures a smoother journey. This whole volatility which we are experiencing, remember that volatility is a feature of the market. It's not a bug. And you want to read more about it, you can read an article which one of our fund managers has written on the same subject. we have to have the right asset allocation and diversification to manage this in the long term. Well, that does not end with it. As long as we are on this journey, remember to have a checkpoint, review your portfolio, rebalance it, keep on investing regularly. As you learn about it, take the opportunities or take benefit of the opportunities which the market presents. And there are multiple of those. You could have seen in that 40-year journey, there were many times the market would have fallen by 15, 20, 25%. Take advantage of that. And last but not the least, and this is very important, right? Whether it is, we shouldn't grudge the commissions which our mutual fund distributors make or the fees which our advisors charge us, because at the end of the day, if it is not a full-time job to track the markets or track funds or know about companies, we should take professional help. I think that will help us in the long run. It allows us to focus on our main job, and it also helps us manage our money better. And I think that is something which I wanted to share. Now, coming to the agenda of the day, we are talking of UTI Flexi Cap Fund. Close to 25,000 crore AUM, more than 18 lakh folios, well diversified portfolio, shows the power of conviction and stock booking when you have a 10% portfolio turnover ratio, very low churn, and you have, I'm going to hand it over. I don't want to talk about, much about the fund. I'll hand it over to my colleague and our head of equity, Mr. Ajay Tyagi, who will take you through the process, the approach to this, and will be, willing to answer any questions you might have. So welcome, Ajay. Over to you.
Thank you, Gaurav, and welcome everyone. Very good afternoon to you. Firstly, Gaurav, it was a pleasure listening to you over the last 15 minutes, even though we are in the thick of action all the time, but it is important to keep in mind the words of wisdom that you shared about the discipline around investing, about having a plan and sticking to the plan. We will now shift gears and we would go to the next step in the sequence, which is if you have a plan in place, you ultimately also have to select funds which help you realize these plans. And we are going to talk about the UTI Equity Fund today, which Gaurav said is enjoying its 30th year. In fact, I should say 30 years completed successfully, has stepped into its 31st year. And, it's with great pride that we keep reminding ourselves at UTI that way back in 1992, this fund went into the Limca Book of Records for the largest number of applications that it actually collected during the initial offering. So with that, let me just quickly run you through the core philosophy of this fund. And post that, of course, we will take questions. Very quickly, what's the core philosophy of this fund? You may have heard us speak this many times in the past, but it is important to keep reminding ourselves. Our North Star, our basic core principle in this fund is to start with quality. We would always remind ourselves that businesses that have created serious wealth for investors over the long run have ultimately been businesses that have created economic value through their existence. So essentially what we're talking about is, and sustainability is a key term today. We all talk about sustainability in every walk of life, and sustainability of wealth is actually linked to the sustainability of the economic value creation that a business possesses and it delivers over time. Without getting into too much of technicalities, how do we actually reach out to these gems? How do we figure out whether the business does possess these quality attributes, and how do we define quality in the first place? I think the simple rule of thumb is to look at the capital efficiency of any business as measured by its return on capital employed. Some people like to use return on equity, others like to use return on investments. I would not try to distinguish between these three. They are all very, very similar to each other. I would use them interchangeably. But yes, I would emphasize on the fact that if a business has high return on capital or high return on equity, it indeed possesses those economic characteristics of being able to create economic value. And it is this attribute that leads such businesses to create sustainable wealth for its shareholders over years and years and over decades. But you see, the basic attribute that this business possesses of high profitability as represented by high ROEs does not mean that the business will be a winner every quarter, every 6 months, every 12 months, and so on. Because if it was to be so simple, and if there were to be a one-to-one linear relationship between the value creation that a business does and the price that it commands on a weekly, monthly, quarterly, yearly basis, then I guess equity markets would not have given us the disproportionate kind of returns that they deliver compared to any other asset class. It is a well-known fact that from time to time, there is always a departure between the underlying value of a business and the price at which it trades. When we look at quality, when we talk about quality, we are always going back and checking on this key attribute, whether the business is persisting and possessing that, or is it kind of losing that quality attribute. We are not looking at the stock price to determine whether the business is still great or not. Oftentimes, great businesses could be one of the worst stocks in any time period. That's not the right way to actually figure out whether they are still the best quality businesses in any particular economy. The quality of the business will again have to be rechecked, looking at their past track record and also your analysis about whether the future would be as good when it comes to the profitability of these businesses, when it comes to their cash flow generating ability, when it comes to the fact that is their balance sheet going to remain extremely strong well into the future. So I think that's the most important thing for us. It certainly is the starting point for us. We would never jump to a business which is looking very attractive in terms of its growth outlook. We will never jump to a business which is looking extremely cheap because of a sell-off in the market without checking on its historical track record on delivering quality and also the reasons why this quality will indeed persist well into the future. With that, let me come to the next stage of our philosophy. Having checked for quality, having assured ourselves that indeed these are the set of businesses which are one of the best available in the country in terms of their balance sheet strength, their strong cash flow generation, their ability to maintain margins, we now try to look for amongst this set which are the ones which can continue to actually grow. And a rule of thumb is very, very simple. You see, we want to own businesses which actually deliver us growth at least 200 to 300 basis points, that is 2 to 3 percentage points higher than India's nominal GDP growth. On an average, India's nominal GDP growth over the last decade has been about 12 to 13%. And what we are looking for when we look for high growth businesses, we are looking for businesses that can deliver to us about 15% growth or higher. Higher the better, but at least about the promise of a 14 to 15% sustainable growth. So this is how we define growth. And this is important for us because you see, while quality is important in terms of creating value, but if we have to compound this value, then we have to look at factors which would lead to growth of this business and growth of this franchise. And compounding is a term that all of you use very, very frequently. This is something which all of us understand. But I want to take you a step back when we talk about compounding. You see, we talk about compounding of wealth, we talk about compounding of returns, but this compounding happens only when the business compounds its own franchise. When the business grows from, let's say, selling 1 lakh cars to selling 2 lakh cars, and then eventually to selling 5 lakh cars. And this is possible if the business is able to grow from, let's say, 100 sales outlets in the country to 200 sales outlets to eventually 400 sales outlets. And of course, like this, keeps moving up. So it is the growth of the franchise and the long runway of growth that any particular business possesses, that we always try to look at and again satisfy ourselves whether this growth will persist for the next 5-7 years or a decade or not, and what would be the reasons for the persistence of this growth. Different industries would have different reasons for persistence of growth. I will not go into the details today, that's not the topic of discussion, but I do want to leave you with this thought that there would be a different reason for a business like DMart to continue growing well into the next 10 years, just like there is a very different reason for a company like L&T Infotech to continue delivering between 15 to 20% kind of growth. At least that's our expectation for a fairly long period of time to come. So that's the broad thing that we look at. The last point, which I should definitely touch upon, is valuation. And here, let me just tell you one thing very, very categorically. I really do not want you to leave this discussion today with an impression that UTI Flexi Cap Fund is about buying high quality and high growth businesses, but disregarding valuation, not looking at valuation at all. We pay a lot of emphasis on valuation, but there is a reason why in all of our communication to you, valuation pretty much comes in the end. And that is because if you look at how we build our portfolio, how we select stocks, we spend the maximum amount of time on factor number one, which is quality. Because we truly believe that for sustainable wealth creation, the most important thing is buying a great business. If a business is not great, you buy it at any valuation. And I don't want to take names, but I'm sure you know what I'm referring to. Think of any company which was available cheap in the last 20, 30 years. In fact, there's a saying in the market that cheap remains cheap, and there's a valid reason for it, and expensive remains expensive, and there too is a valid reason for it. So valuation can never be the starting point for us. It is always the strength of the business, the quality of the business, that is always the starting point for us, because we believe that if we actually get this particular thing right, we may have to wait a few quarters in terms of delivering returns that our investors want to investors seek. But in the long run, we certainly would actually emerge as a winner. Now, with this, I do want to spend a couple of minutes on valuation. Important for us, although it is the last in this sequence that is there in front of you on this slide. But a few points that I wish to make here. If you look at a business which is trading at a multiple of 40 times, it certainly does not mean that it is a very expensive business and you will not create wealth by owning it in the long run. Equally, if you own a business which is trading at a PE of 10 times, it certainly does not mean that it is available cheap, and therefore it will create very strong wealth for you again in the long run. The valuation of a business is actually a function of the construct of the business. Again, please don't be surprised if I say which is determined by only two factors. For those of you, who are fresh out of college or who have actually done some, training and courses in investments and valuations, if you scan your textbooks, you'll realize that the valuation of any business, whether represented by price earnings multiple or price to book value, is simply a function of return on equity into growth. If these two factors are high, then even a valuation of 40 times can be sustainable, and it would indeed be a fair valuation band for certain businesses which possess very high ROEs and very high growth rates. And the inverse of this is equally true. If your ROEs are very, very poor, if your long-term growth profile is very, very poor, then even a PE of 10 or 12 times will not actually end up being an attractive valuation multiple. So we look at all of these things very closely. Therefore, we never paint anything with the same brush to say that, look, 40 is cheap and 40 is expensive and 10 is cheap, and therefore, let's pull the trigger on the business which is available at 10 times earnings. The second important point that we look at is going beyond just the earnings multiple, looking at the cash flow multiple of businesses, because the true value creation potential doesn't lie in the accounting earnings. It lies in the cash flow characteristics of businesses. Accounting earnings can hide a lot of things. They hide the amount of capital expenditure that a business does in a particular year. They hide the amount of working capital that goes into running that particular business. But all of these things open up when you do a cash flow analysis, and therefore it becomes important for us to do a price to free cash flow analysis. And this is where very surprising results emerge out. When you look at companies which you may dismiss as expensive because they are trading at a PE of 40 or 50, they suddenly start to look cheap when we look at them from the perspective of price to free cash flow. And that's one factor that we always keep on our radar. So in nutshell, our core philosophy is very, very simple. Buy great businesses. Within these set of great businesses, look for businesses that can continue to grow sustainably into the very long run, which means 5 years and beyond. Be patient with these businesses. Think about yourself as an owner of these businesses. And indeed, as a shareholder, as an investor, you are an owner of these businesses. Although you may be owning 0.01% of a Maruti, but still do consider yourself as an owner of these businesses, and therefore always try to visualize the prospects of this business over the next 3 to 5 years, rather than looking at what their stock price would be like over the next 3 to 5 months or 3 to 6 months. And therefore inculcate a very strong sense of patience and a long-term orientation, which always helps you to zoom out of the volatility in the markets, which is something which is pretty much the nature of the markets. But zoom out of this volatility, keep focusing on the business, and I can assure you that the results would indeed be very, very gratifying. Gaurav used the word delayed gratification, and I can say that for an investor, more than understanding the concept of compounding, understanding the concept of delayed gratification is even more beneficial. So yes, I'll stop here. Gaurav, I see a smile on your face.
नहीं, Ajay, मैं ये कहना चाहता शुक्रिया. I am owner of this business, and so thank you for your, fundamental first approach and this long-term conviction. What I got is, it's not a question of sacrificing any of these parameters, but the sweet spot is at the intersection of quality, growth, and valuation. So really appreciate all the work you're doing. So शुक्रिया. But आपसे एक चीज पूछना जरूरी समझता था कि हमारा जो बेंचमार्क है TRI 5 निफ्टी 500 TRI बेंचमार्क है, बट द पोर्टफोलियो ऑफ UTI Flexi Cap इज वेरी डिफरेंट फ्रॉम द बेंचमार्क. तो इसका क्या कारण है, एंड व्हाट इज द इम्पैक्ट ऑफ दिस ऑन द पोर्टफोलियो?
श्योर गौरव. देखिए, सबसे पहले हमने जिस तरीके से अपनी फिलॉसफी समझाई, जो एक चीज उभर के आती है व्हेन वी एक्सप्लेन द फिलॉसफी इज दैट वी आर एसेंशियली लुकिंग एट द बिजनेस एंड द पोटेंशियल ऑफ द बिजनेस. ऑफ कोर्स वी हैव टू बी मेजर्ड इन टर्म्स ऑफ आवर परफॉर्मेंस एट रेगुलर इंटरवल्स, और उसके लिए बहुत जरूरी है कि आप सामने कोई बेंचमार्क रखें. Because after all, when we say that UTI Flexi Cap is a great investment and will prove to be a great investment for our investors should be able to measure this performance against something and hence a benchmark. लेकिन अगर आप बात करें कि किस तरीके से हम पोर्टफोलियो कंस्ट्रक्ट करते हैं, तो in that construction process we never keep the constituents of the benchmark in front of us. हमें इस चीज से कुछ खास लेना देना नहीं है कि बेंचमार्क के अंदर आईटी सेक्टर कितना है, बेंचमार्क के अंदर एनर्जी सेक्टर कितना है, बेंचमार्क के अंदर रियल एस्टेट या कमोडिटीज या मेटल सेक्टर कितने हैं. हमारे लिए जरूरी चीज है कि बिजनेस कितना मजबूत है, और बिजनेस कितनी मजबूती के साथ अगले 5-7 सालों में भी बरकरार रहेगा. और अगर ऐसे बिजनेसेस बेंचमार्क के अंदर रिप्रेजेंटेड नहीं है, तो उससे हमें कोई फर्क नहीं पड़ता. और इसके एकदम विपरीत, अगर बहुत कमजोर बिजनेसेस बेंचमार्क के अंदर रिप्रेजेंटेड हैं, जो कि हमारे फ्रेमवर्क के अंदर अच्छे नहीं उतरते हैं, हमारे प्रोसेस के अंदर उनके ऊपर हम टिक मार्क नहीं लगा सकते, तो हम ऐसे बिजनेसेस अपने फंड में नहीं रखेंगे. अल्टीमेटली व्हाट वी आर ट्राइंग टू से इन नटशेल इज कि हमारी फिलॉसफी इज बॉटम अप. वी आर ऑलवेज अट्रैक्टेड टुवर्ड्स ग्रेट बिजनेसेस. If those businesses are not represented in the benchmark, so be it. हम उसकी वजह से अपनी स्ट्रैटेजी नहीं चेंज करेंगे। और क्योंकि हमारा फोकस हमेशा क्वालिटी के ऊपर रहा है, तो आपकी ऑब्जर्वेशन भी बिल्कुल सही है कि हमारा पोर्टफोलियो हमेशा बेंचमार्क के मुकाबले बहुत अलग दिखा है पिछले 5-7 सालों में। और मैं समझता हूं कि जो हमारी एक प्रक्रिया है, एक प्रोसेस है स्टॉक सिलेक्शन का, उसके चलते अगले 5 से 7 सालों के अंदर भी आपको हमारा पोर्टफोलियो बेंचमार्क से जरूर अलग दिखाई देगा। अब आपने पूछा कि इसका क्या कॉन्सिक्वेंसेस हो सकते हैं, तो बहुत सरल जवाब है कि अगर हमारा पोर्टफोलियो बेंचमार्क से बहुत अलग है, तो हमारे पोर्टफोलियो की रिटर्न्स भी बेंचमार्क से हमेशा अलग दिखाई देगी। देयर विल बी टाइम पीरियड्स व्हेन द पोर्टफोलियो में सिग्निफिकेंटली अंडर परफॉर्म द बेंचमार्क। अब आपके सामने जो इस वक्त स्लाइड है, इट शोकेसेस, अगर आप खाली उन रेड बार्स के ऊपर फोकस करें जो आपके सामने है टुवर्ड्स द बॉटम, ये वो सेक्टर्स हैं जो हमारे फंड के अंदर बिल्कुल भी रिप्रेजेंटेड नहीं है, जैसे कि इंफ्रास्ट्रक्चर या कंस्ट्रक्शन कंपनीज, जैसे कि मेटल कंपनीज, जैसे कि ऑयल एंड गैस कंपनीज, पावर यूटिलिटीज, रियल एस्टेट। एंड we all know this, that the best performing stocks over the last 1 year have come from these sectors and we own 0%. तो सीधी सी बात है कि जो चीज हम नहीं ओन करते क्योंकि हमें लगता है कि इन सब बिजनेसेस के अंदर क्वालिटी नहीं देखने को मिलती है, वी विल अंडर परफॉर्म व्हेन दे डू वेल एंड देयरफॉर वी विल सिग्निफिकेंटली अंडर परफॉर्म द बेंचमार्क। लेकिन कहीं ना कहीं अगर हमको ये विश्वास है कि द वेल्थ क्रिएशन बाय मारुति ओवर द नेक्स्ट 5 years विल बी सिग्निफिकेंटली हायर देन टाटा स्टील, and therefore we should keep maintaining exposure in Maruti rather than Tata Steel, तो लॉन्ग टर्म में कहीं ना कहीं हम इस बेंचमार्क को बीट भी जरूर करेंगे। पास्ट ट्रैक रिकॉर्ड भी यही रहा है, और अगर यही प्रोसेस हम बहुत ज्यादा फोकस के साथ फॉलो करते रहे तो मुझे लगता है कि आर एबिलिटी टू बीट द बेंचमार्क विल रिमेन हाई। हालांकि टाइम टू टाइम शॉर्ट टर्म इंटरवल्स में कभी आपको दिखाई देगा कि हम बेंचमार्क से अंडर परफॉर्म भी कर रहे हैं। जी
Shukriya. I think that was reassuring. Taking the conversation forward, I think since the nomenclature itself is flexi caps, I think my next question would be, how do you decide allocation between market caps? And a leading question to that would be, कि आप mid cap और small cap में कैसे allocate करते हैं?
श्योर गौरव, अच्छा क्वेश्चन है। और क्योंकि ये मैंने अभी अभी आपको बताया कि हमारी फिलॉसफी एकदम बॉटम अप है, हमारी फिलॉसफी टुवर्ड्स ओनिंग बिजनेसेस इन लार्ज, मिड और स्मॉल इज अगेन बॉटम अप। देखिए, फ्लेक्सी कैप मुझे लगता है कहीं ना कहीं इट नीड्स अ प्रॉपर डेफिनेशन फॉर ऑल इन्वेस्टर्स। फ्लेक्सी कैप का मायने ये बिल्कुल नहीं है कि आप मिड से लार्ज में शिफ्ट कर जाइए या फिर आप लार्ज से स्मॉल में चले जाइए जब आपको लगता है कि मार्केट का कुछ मार्केट का रुख बदलने वाला है, या मार्केट के अंदर स्मॉल कैप बिजनेसेस को बहुत एक फेवरेबल टाइम पीरियड मिलने वाला है। फ्लेक्सी कैप के सही मायने ये हैं कि जब आप अपने पोर्टफोलियो को कंस्ट्रक्ट कर रहे हैं और अपने सामने आप 500,000 कंपनीज का एनालिसिस कर रहे हैं, तो बेहिचक आप किसी भी कंपनी को पिक कर सकते हैं जो आपकी फिलॉसफी के अनुकूल हो, which basically means that I don't need to worry about the fact that this portfolio needs to maintain at least 80% in large caps. And if I find a great idea which is from the mid cap space, but I have already exhausted my allowance in mid caps because I already own 18-19% in mid caps, I may have to let go of it, or I may have to sell out some other mid cap to make space for it. When we are looking at a flexi cap category, I think the biggest advantage of running funds in flexi cap category is that according to your philosophy, you can invest in large, mid and small in any proportion that you think is fit. It is certainly not to do with rotation. It is certainly not to do with the fact कि जब आपको लगे कि देखिए मार्केट अब जो है कमजोर रहने वाले हैं, मिड और स्मॉल कैप के अंदर ज्यादा गिरावट होगी, देयरफॉर मैं मिड और स्मॉल कैप से निकल के लार्ज कैप में आ जाता हूं। दिस इज एग्जैक्ट ऑपोजिट ऑफ व्हाट you had mentioned, Gaurav, in your opening remarks, which is don't try to time the market. Timing the market is not only about when to invest in the market and when to come out. Timing the market is an equally big mistake if you're trying to say कि देखिए अब मैं मिड कैप से निकल के लार्ज में जाता हूं और लार्ज से निकल के स्मॉल में जाता हूं. This itself is a very, very big error which needs to be avoided. This is a very serious form of, again, trying to time the market. So हमारे लिए लार्ज, मिड और स्मॉल तीनों इंपॉर्टेंट है। आपका दूसरा प्रश्न था कि मिड और स्मॉल कैप के अंदर हम कैसे चुनाव करते हैं। वी डोंट डाइल्यूट आवर फोकस, गौरव, एट ऑल। जो क्वालिटी के हमने रूल्स लिखे हुए हैं और जो हमने डिस्कस किए थे अभी, हम वही रूल्स ऑल अक्रॉस लार्ज, मिड, स्मॉल में लगाते हैं। कंपनी चाहे कितनी छोटी क्यों ना हो, कंपनी भले ही 5,000 करोड़ की मार्केट कैप की क्यों ना हो, हमें उसके अंदर भी क्वालिटी एट्रीब्यूट्स दिखाई देने चाहिए। Only then will we get excited about these companies. So we want quality attributes as the starting point, even in small caps. Of course, in case of small and mid caps, quality is always a little more easy to get, because when you are at a very early stage of your life cycle, ability to show growth obviously is much higher. So the sequence will still remain same for mid and small caps as well.
No, thank you. It's becoming a nice masterclass, Ajay. It's good to hear this. But I'm just going to stretch this argument further. आपने ये तो बता दिया कि between market capitalization कैसे जाते हैं और क्या आपका सोचना है इसके बारे में. When it comes to specific stocks, you know, I'm just illustratively going to ask this question and not with any other intention. But say you have a Bajaj Finance or HDFC or, you know, Suven Pharmaceuticals. How do you decide the position size or weightages in the portfolio? Because you spoke about bottoms up stock picking. So how do you decide kitna stock ka weightage hona chahiye portfolio mein? How do you go about that?
Sure. Thanks, Gaurav. It's becoming a master class because you're asking these master questions. Again, this eventually is the next step in the series of things that we do towards constructing our portfolio. Now, after determining whether a business has high quality, whether it will continue in terms of its growth, whether it's available to us at a fair valuation, the next step is getting into the portfolio, and then at what position size. उसमें हम 1% पोजीशन बनाएं, 0.5% बनाएं, 2% बनाएं. देखिए, this in turn for us has to be scientific again. कोई बहुत ज्यादा एक एब्स्ट्रैक्ट थॉट दिमाग में नहीं होनी चाहिए कि देखिए मेरे को मारुति पसंद है तो इसलिए मैं इसको 3% बनाऊंगा, और मेरे को आइशर मोटर्स इतना पसंद नहीं है इसलिए मैं उसको 1% बनाऊंगा. इस प्रोसेस के पीछे भी कुछ ना कुछ साइंस जरूर होनी चाहिए, और हमने ये देखा है कि द बेस्ट पॉसिबल साइंस बिहाइंड दिस इज योर कन्विक्शन अराउंड द कोर प्रिंसिपल्स ऑफ योर फिलॉसफी. हमारी फिलॉसफी के कोर प्रिंसिपल्स क्या हैं? The quality of a business as measured by ROE and the persistence of growth in that business. और अगर हमको ये कन्विक्शन है कि देखिए बजाज फाइनेंस वन ऑफ द स्ट्रॉन्गेस्ट ग्रोथ बिजनेस रहने वाला है अगले 5 साल में, जिन 50 स्टॉक्स से हमने अपना पोर्टफोलियो कंस्ट्रक्ट किया है, उन 50 स्टॉक्स में कहीं ना कहीं हमारा ये विश्वास है दैट बजाज फाइनेंस विल रिमेन द स्ट्रॉन्गेस्ट बिजनेस इन टर्म्स ऑफ ग्रोथ. और साथ ही साथ जहां तक बजाज फाइनेंस के ROEs की बात की जाए, वहां पे भी हमारा ये मानना है कि ROEs भी स्ट्रॉन्ग रहेंगे. Our conviction around these two factors लीड टूवर्ड्स के बजाज फाइनेंस का वेटेज क्या होना चाहिए. एक तरह से मैं अगर अगेंस्ट बजाज फाइनेंस बात करूं AU स्मॉल फाइनेंस बैंक की, जिसका वेटेज 2% है, वो इसलिए है क्योंकि कहीं ना कहीं हमारा कन्विक्शन कंपेयर टू बजाज फाइनेंस एब्सोल्यूट लेवल पे तो हमारा कन्विक्शन AU में भी बहुत स्ट्रांग है, जबरदस्त है, लेकिन क्योंकि हम अब पोर्टफोलियो कंस्ट्रक्शन की बात कर रहे हैं, क्योंकि पोर्टफोलियो के अंदर किसी का वेटेज 5 रहेगा, किसी का 4, किसी का 3, तो अब हम रिलेटिव कन्विक्शन की बात कर रहे हैं. रिलेटिव कन्विक्शन में हमको लगता है कि बजाज फाइनेंस के ऊपर हमारा कॉन्फिडेंस ज्यादा है कि वो 20-22% रिटर्न ऑन इक्विटी लंबे समय तक दे पाएगा, और भले ही पेंडेमिक आए, IL&FS क्राइसिस जैसे कुछ दौर आए या फिर डीमोनेटाइजेशन जैसे दौर आए, वो 20-22% के आसपास बजाज फाइनेंस बिल्कुल सक्षम है इन टर्म्स ऑफ डिलीवरिंग ROEs. So these are the kind of factors that give us the confidence in terms of why somebody should be at 5 and why some stock should be at 1. Yeah.
Thanks, Ajay. There'll be tons of questions. I'm sure people have warmed up. There are a lot of questions coming in the chat, but I'll start off. And this question, which I had, has also been asked by Mr. Shivnath Ray. And I think part of it you alluded when you were talking about the divergence from the benchmark. But his question is, under what market conditions the fund may underperform? And how do you respond to such situations, and what kind of changes do you make in the portfolio at that point in time?
Sure. Oh, that's an excellent question. So Gaurav, first thing, I would say that whenever poor quality businesses, which we sometimes also refer to as value-oriented businesses and value-oriented sectors start to do well, we will underperform. In our particular case, we have always mentioned कि हमारे पोर्टफोलियो में रियल एस्टेट नहीं होगा, कमोडिटीज नहीं रहेंगे, जिसका मतलब है मेटल्स नहीं रहेंगे, ऑयल एंड गैस एनर्जी स्टॉक्स नहीं रहेंगे. जब जब मेटल्स, एनर्जी, इन सब सेक्टर्स में, पावर, रियल एस्टेट, जब जब इन सेक्टर्स के अंदर एक रैली आएगी, our fund will certainly underperform. And the reason for that is simple. In sub sectors के अंदर we are unable to find strong high quality businesses, at least on a sustainable basis. और इसके चलते we are unable to make investments into companies which come from these sectors. Because like I explained, we are bottom up in our approach. And because we are unable to find great companies or high quality companies from these sectors, whenever these sectors do well, we will underperform. The last 2 years was a phase when infrastructure, real estate, commodities, energy companies have done very well, and we have not been able to participate in that particular rally. The other way to explain this is sometimes people also refer to high beta and low beta. Our beta is low because we are into high quality companies. जब भी market में एक high beta rally होगी, you should expect our fund to underperform. Now, the next thing you asked was how do we react to this? You see, experience has taught us that you don't react to these. The only thing that we are supposed to do is go back and keep analyzing your businesses. क्या वो 50 businesses जो हमारे पोर्टफोलियो में हैं, ये उतने ही मजबूत हैं जितने 2 साल, 3 साल, 5 साल पहले थे? अगर ये उतने ही मजबूत हैं और उतने ही स्ट्रॉन्ग ग्रोथ दिखाने की क्षमता रखते हैं अगले 3 से 5 सालों में, तो हमें कुछ करने की जरूरत नहीं है. We should not react. In fact, if you really want to enjoy the compounding effect of great businesses, then the first thing you have to learn is कि जब जब आप underperform करेंगे, उस underperformance को आप accept करिए with humility and don't break the compounding impact of these great businesses. Continue owning them with patience, and that's what we try to do. Yeah.
Good to see that the fund managers also go through the same tensions as individual investors, Ajay. I think there was a question, but I guess you have answered, but I'm still going to read it out, what Mr. Shivnath Ray asked. Mr. Radhakrishna Rao is asking, do you trim exposure in any of your holdings if their valuations continue to soar over time? And would you book profit and re-enter back when valuations turn attractive? But I guess you just kind of answered some bit of it.
I will answer this in short because this is an important question, Gaurav. The answer is absolutely yes. The answer is yes, because between 2016 and 2020, if we would not have trimmed Bajaj Finance, it would have become maybe 15% of our portfolio. We never allowed it to cross 7.5%. Although the UTI risk limits allow us to take the exposure up to 9.5%, but we still limited it to 7.5% because we thought that the valuations are getting too much. Likewise, in 2021, whole of 2021, IT stocks went up 4x, 5x. If we would not have trimmed our size, then these IT stocks like L&T, Infotech, and Mindtree would have become 6-7% of our fund. We did not do that. We were actually trimming down our position. And if you exactly reverse this and now look at our behavior over the last 4-5 months, when we have seen the same IT stocks actually fall down 50%, you may be surprised that why is it that we are still having an exposure not too different from what it was in Jan 2022. It is because we are buying back all of these stocks again because their valuations have become 1/2 of what they were, and their weightage or exposure in our fund would have become half of what we desire it to be. Or is wajah se we have started buying, and we have been buying in the last 4-5 months all of these stocks. So yes, we trim exposures when valuations are overdone, and जैसे जैसे valuations comfortable होती हैं, attractive होती हैं, same companies के अंदर we start to increase exposure. What we don't do is we don't sell our jewels completely out of our portfolio because these jewels are very, very rare, and we don't want to sell our gems just because वो expensive हो गए हैं. We react by just trimming exposure. Yeah.
Thanks for that, Ajay. I think Mr. Vinod Jain asks a related question, which you just alluded to in terms of the risk framework. He says, what is the investment process? How does it has an edge over its peers? And what are the risk framework in place at UTI?
देखिए विनोद जी, इन्वेस्टमेंट प्रोसेस तो हमने समझाया था पिछले 15-20 मिनट में। किस तरीके से ये इन्वेस्टमेंट प्रोसेस बाकियों से अलग है, I leave that to you because I'm sure you listen to all other fund managers and fund houses and their processes much more than we do. So I'm sure आप इस चीज में ज्यादा capable हैं कि आप हमारे processes को दूसरे किसी फंड हाउसेस के प्रोसेसेस के सामने मेजर कर पाए। जहां तक कि रिस्क फ्रेमवर्क की बात है, जरूर यूटीआई के अंदर रिस्क प्रोसेसेस हर फंड कैटेगरी के लिए बहुत ज्यादा मजबूत हैं। रियल टाइम बेसिस पे इनकी मॉनिटरिंग की जाती है। मैं एग्जांपल के तौर पे आपके सामने 2-3 रिस्क लिमिट्स और रिस्क प्रोसेसेस रख सकता हूं। किसी भी एक इंडिविजुअल स्टॉक में हमारा मैक्सिमम एक्सपोजर 9.5% रह सकता है, उससे ज्यादा नहीं। सेबी अलाउज अस 10%, बट वी आर 0.5% लोअर देन दैट। नाउ दिस इज ट्रू ऑफ बेंचमार्क स्टॉक्स। अगर मेरे पोर्टफोलियो में कोई नॉन बेंचमार्क स्टॉक है तो उसके अंदर हमारा एक्सपोजर 5% से ज्यादा नहीं रह सकता। अगर 5.01% जाता है, the next day morning our risk management team tells us that we have to bring it down below 5%. So many of the risk measures जो हम follow करते हैं, they are tracked on a real time basis and immediately we are flagged. Yeah.
No, thanks Ajay, thanks for that. I think Mr. Virendra Dapurkar has an interesting question. You know, we've seen in the past that some of the fund houses have stopped fresh inflows in funds because the size has become too huge. So his question is, now that the fund size has become close to 25,000 crore, has size become an impediment for
Sure.
you?
Yeah, that's a very valid question, especially given where we are today in terms of size. देखिए 2 से 3 चीज मैं आपके सामने रखना चाहूंगा। नंबर 1, किसी भी फंड के साइज के बारे में जब हम बात करते हैं, immediately what we have to understand is what is the portfolio turnover of that fund. गौरव ने शुरुआत में ही बताया था कि UTI Flexi Cap Fund का पोर्टफोलियो टर्नओवर है 10%. Assume we are at 25,000 crores, give or take, that's a round figure, easy to work. 10% portfolio turnover ratio means कि हम हर साल 2,500 करोड़ वर्थ ऑफ बाइंग या सेलिंग करते हैं। आप दोनों में से कोई एक लेग पकड़ लीजिए, बिकॉज जिस तरीके से पोर्टफोलियो टर्नओवर रेशियो की डेफिनेशन हम यूज करते हैं, उसमें से आइदर बाइंग या सेलिंग कोई एक लेग को समझना जरूरी है। 2,500 करोड़ वर्थ ऑफ स्टॉक्स आर सोल्ड इन अ पर्टिकुलर ईयर। अब हम बात कर लेते हैं कि ऐसे फंड की जिसका साइज केवल 5,000 करोड़ है। सबसे पहले मैं आपको ये बताना चाहूंगा कि इंडस्ट्री का जो इक्विटी फंड्स का एवरेज पोर्टफोलियो टर्नओवर रेशियो है, पूरी इंडस्ट्री की जब हम बात करते हैं, एंड व्हेन वी लुक एट ऑल इक्विटी स्कीम्स, ये एवरेज करीबन 60-65% है। 60 to 65% इज द एवरेज पोर्टफोलियो टर्नओवर रेशियो ऑफ इक्विटी फंड्स इन द इंडियन म्यूचुअल फंड इंडस्ट्री। एक 5,000 करोड़ के फंड के ऊपर अगर आप 60% पोर्टफोलियो टर्नओवर रेशियो लगाते हैं, तो इसका मतलब है कि 3,000 करोड़ वर्थ ऑफ स्टॉक्स आर चेंज्ड एवरी ईयर और सोल्ड एवरी ईयर। लेट्स से हमारा 10% मींस 2,500, ऑन एन एवरेज 5,000 के ऊपर 60% एवरेज पोर्टफोलियो टर्नओवर रेशियो मींस 3,000, व्हिच इज हायर देन अस। देयरफॉर खाली एब्सोल्यूट फिगर देखने से खाली आधी जानकारी मिल पाती है। वी हैव टू अंडरस्टैंड व्हाट इज द पोर्टफोलियो टर्नओवर रेशियो। देन द सेकंड थिंग इज दिस पोर्टफोलियो टर्नओवर रेशियो सस्टेनेबल? ये 10-15% लास्ट 2-3 साल में दिखा है। विल इट रिमेन 10-15%? कैन इट इंक्रीज टू 50%? And the next step therefore is to not only look at the past track record, also try and understand the philosophy of the fund. We explained it to you that when we are investing in businesses, हम अपने आप को उस बिजनेस का एक हिस्सेदार मानते हैं, एक शेयर होल्डर मानते हैं, एक पार्शियल ओनर की तरीके से हम अपने आप को देखते हैं। And we are buying Maruti as a owner of the business for the next 5 years, rather than saying कि मुझे लगता है कहीं ना कहीं ऑटो क्षेत्र के अंदर बहुत ज्यादा करेक्शन आ चुका है, अगले 6 महीने में ऑटो सेक्टर बहुत अच्छा करेगा, देयरफॉर आई शुड नाउ बिल्ड एक्सपोजर इन ऑटो। Because it is our core philosophy to remain patient with our businesses, we are reasonably confident that our portfolio turnover ratio will remain low. अगर हमारा fund 50,000 करोड़ भी हो जाता है, 10% on 50,000 crore is 5,000 crores of portfolio turnover, which to my mind is hardly anything, given the fact कि Indian market का market capitalization $3 trillion पहुंच चुका है. हमारा fund केवल 3 बिलियन है. उस 3 बिलियन का 10% होता है केवल 300 million, which is hardly anything. The last part which I want to tell you about this thing is आपको ये भी देखना है कि आपकी फिलॉसफी के अंदर आप क्या अचीव करना चाह रहे हैं. ज्यादा करके देखा गया है कि many value funds, and rightfully so, always try to look at companies which are going through some temporary challenge, because of which their valuations have been marked down. Valuations कमजोर हैं, depressed हो चुकी हैं, and these investors and these value managers want to take advantage of this. Therefore, they invest into these stocks. But when they invest into these stocks, they already know कि देखिए हम 2-3 साल बाद इससे निकल जाएंगे या 1 साल बाद इससे निकल जाएंगे और उस टाइम पे हम किसी और कंपनी के अंदर घुसेंगे. So the focus of these funds is to buy companies which are attractive today. Once it plays out, they will not be attractive anymore. They will look for some other such opportunities. Here, it will be a bigger challenge in terms of managing a larger size and scale. We are always patient on both sides. जैसा कि मैंने आपको पहले भी बताया, हम बहुत धीरे धीरे मिड और स्मॉल कैप के अंदर एक्सपोजर बिल्ड करते हैं. जब हमारी कन्विक्शन उस बिजनेस के बारे में बहुत जबरदस्त होती है, तब जाके उसके अंदर हम 2%, 3% या 4% का निवेश करते हैं. Therefore, we are very gradual, both in terms of increasing exposure and in terms of reducing exposure. Yes.
No, thanks. I'm also conscious of time, Ajay, but thanks for your patience responses. With your permission and the audience permission, we probably have a hard stop at 4:35. We'll extend it by 5-7 minutes. So maybe last couple of questions. One of the things which has been making headlines are the spate of IPOs in the market, right? So does the fund invest in IPOs? And if yes, then what's the process followed in identifying potential businesses?
Thanks, Gaurav, for this question. Yes, the fund invests in IPOs, but you can assume that our participation is going to be very, very low. There were approximately 80 IPOs that have come up in the last 1.5 to 2 years. The fund has invested only into 3 IPOs. So that's the amount of, that's the strike rate in terms of investing into IPOs. और उसका reason बहुत simple है. उसका रीजन जो हमारी कोर फिलॉसफी है उसी में छुपा हुआ है, जो कि सिंपली हमको ये हमेशा रिमाइंड कराती है कि देखिए, जब तक बिजनेस स्ट्रांग नहीं है और आपको कन्विक्शन नहीं है कि बिजनेस स्ट्रांग है, आप उसमें निवेश ना करिए. आईपीओ कंपनीज के अंदर लॉन्ग टर्म हिस्ट्री हमारे लिए अवेलेबल नहीं होती है. हमारा कॉन्फिडेंस और कन्विक्शन उन कंपनीज के बारे में थोड़ा लो रहता है. और हिस्ट्री ऑल्सो टीचेस अस वन थिंग कि अगर वाकई में ये ग्रेट बिजनेस है और अगर आपने उसको आईपीओ में निवेश नहीं किया, उसके आईपीओ के 1 साल बाद भी निवेश नहीं किया, 2 साल बाद भी निवेश नहीं किया, तो भी कुछ ऐसा अपॉर्चुनिटी लॉस नहीं होती. ग्रेट बिजनेसेस compound wealth for 10, 20, 30 years. Rather than getting too excited at the stage of IPO, हमारे लिए जरूरी है कि हम अपनी conviction attain करने के बाद ही निवेश करें. And that's why using the same principles for IPO companies also, we realize कि हमारा strike rate हमेशा low रहता है. Yeah.
No, thanks. So the last couple of questions I'm going to combine and, read it out and then you can probably end with that. I think they are around sectors, IT sector, auto sector. So Preeti Soni asked, with the recent correction seen in IT sector, are there any specific headwinds affecting revenue earning margins of business in this sector? Smith Gandhi follows it up with which sectors are having valuation comfort in the current market. Also, what's your takeaway on the Q4 results? And maybe the last one, I think Vineet has asked that value stocks are expected to outperform growth-oriented funds. If so, then how will you deliver alpha?
Sure.
And I think we'll just bring it to a close. There are many more questions, but knowing your busy schedule, we'll probably end with this. So over to you, Ajay.
Sure. So there are quite a few questions, Gaurav, you asked. I may actually forget a couple, but let me try and respond in the sequence that you asked them. Number one, we are positive on the IT sector, and you see, this is precisely what I said. if the IT sector and the stocks in the IT sector have seen a 40% correction, it does not mean that the sector is going through something very difficult or challenging. It is the nature of the market that from time to time, kisi business ke andar, you see a very favorable scenario in terms of stock prices, and sometimes you see a very unfavorable scenario. We always will go back and say that is the business of Infosys and Mindtree and L&T Infotech as strong as it was in June of 2021? The answer to that is yes. The business is as strong. There were no negative surprises in the last 2 quarters, and these companies are expected to actually continue growing fast. So that's the first question. Second question was again about which sectors do you find attractive in terms of valuations. The one that I just spoke to you about, to my mind, is one of the most attractively priced sectors today. Along with this, the banking sector is also attractively priced. Along with this, even the healthcare sector is also attractively priced. These are some sectors which do have some of the strongest companies in the Indian economy today. Of course, in terms of stock prices, they may have been poor performers in the last 1 to 2 years, but some of the very strong businesses are from these sectors that I've just spoken to you about, and valuations are also very attractive here. I think your next question was about value versus growth. Value is expected to do well. All I can say is that you are looking at the trend of the last 2 years and making this judgment that value is expected to do well. From our perspective, the one point which I want to make to everybody here is कि हमें बिल्कुल अंदाजा नहीं है कि अगले 6 महीने में वैल्यू अच्छा करेगा या ग्रोथ अच्छा करेगा. हमें बिल्कुल कोई अंदाजा नहीं है कि अगले 6 महीने में लार्ज कैप अच्छा करेंगे या मिड कैप अच्छा करेंगे, और हमें ये बिल्कुल अंदाजा नहीं है कि अगले 6 महीने में बैंकिंग सेक्टर अच्छा करेगा या ऑटो सेक्टर अच्छा करेगा. We are trying to analyze businesses, and like I said, our core goal is जो बिजनेस मजबूत हैं, जो वैल्यू क्रिएट करेंगे, उसमें आप हिस्सेदार और भागीदार बनिए, उसके अंदर पेशेंटली बने रहिए, बिकॉज दीज बिजनेसेस विल क्रिएट सस्टेनेबल लॉन्ग टर्म वेल्थ. स्टॉक मार्केट में अगले 6 महीने साल भर में क्या होने वाला है, ना तो हमें इसका कोई अंदेशा है, और मैं नहीं समझता किसी को भी इस बारे में कोई अंदेशा है. सो वी विल स्टे अवे फ्रॉम दैट. इफ वैल्यू कंटिन्यूज टू डू वेल, then I go back to the question which Gaurav had asked, कि कौन से scenarios में your fund will underperform. If value continues to do well, yes, UTI Flexi Cap will underperform, but hopefully we have other funds in the UTI stable which will do very well. We leave that to our MFDs to decide कि भाई हम कौन से fund और कौन सी philosophy से ज़्यादा convinced हैं, इत्तेफाक रखते हैं, and therefore we will actually have a higher allocation to that fund at that point in time. So from our side, we have all these funds. Your last question, Gaurav, if I remember, was on Q4 earnings. I would say in line with what we would have thought. Revenue growth मजबूत रही, लेकिन margins कमजोर रही, because inflation के चलते commodity prices के इस दौर के अंदर सारी input costs businesses के लिए जरूर महंगी हुई हैं, which have impacted their margins. Some businesses are better placed to take control of these margins. जैसा कि मैंने बोला था, high quality businesses के अंदर हमेशा एक lever रहता है pricing power का. So some businesses would have better ability to manage their margins over the next 2-3 quarters. But yes, Q4 का big takeaway is growth is on track. Profits are not because of lower margins. Yeah.
Thank you so much, Ajay, for your patience and this masterful class. It's always a interesting and educating experience for me. I'm sure it would have been same for some of our viewers. Thank you so much for taking this time out. I would also like to thank our audience for this patience listening. There are still questions coming in. I would just request them to send them our way at askuti@uti.co.in, and we would be happy to respond to them. Also tell us about this interaction. If you like to see some more of this, we would be happy to arrange some of these interactions at a more frequent basis. Signing off, wishing you all a very good week ahead. Thank you so much. Good evening.
Thank you, everyone. Have a good evening.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.